Okay, Chapter 3, Job Costing, Part 1. Okay, these are the learning objectives for this chapter, and there's really a lot of information here, a lot of actually big ideas. And we start out looking at the difference between job costing and process costing. And you can think of these as two different models for costing, all right? Some companies use a hybrid between the two, some use both, okay, for different parts of different processes. And we're going to understand the flow of production, and how direct materials and direct labor are traced to jobs. Okay, compute a predetermined overhead rate and use it to allocate overhead to jobs. This is probably your biggest concern right here. Make sure that you're good at this. Then we'll figure out the cost of a job and use it to make business decisions. If we've got over or under allocated overhead, get rid of that. Do some journal entries. Okay. Now, process costing is where you've got a big production, well, usually a big production process, and all the units are exactly the same. And a really good example is paper towels. So all these units go through the same uniform production processes or steps. And what we do is we average the manufacturing costs over all the units produced. That's how we trace it to the unit, okay, because you really can't. And a good example of process costing is this video right here on how paper towels are made. I use paper towels for a lot of things, and after using this video, I don't wash my face with them anymore, put it that way. Now, job costing is what we focus on in Chapter 3, and this is for unique custom-ordered products. It's got to be sort of small batches, and we've got to be able to trace it, okay, to a job. And each unique product or batch, okay, is a separate job. For example, like Boeing might make airplanes for Delta. Okay, that would be a job cost, believe it or not. That would be job costing. A custom home builder is a real good example of job costing. Or a high-end jeweler. I mean, you wouldn't take the cost of everything in a jewelry store and just divide it by the number of pieces. Okay? Accounting firms, they charge by tax return or audit or a set of financial statements. And law firms, as soon as you call an attorney, the first thing they do is hit a timer on their desk. So they charge per minute and per person. Okay, so those are all individual jobs. And this chart is a good illustration of the difference between the two. Hope you can see this. The cost object for job costing is the job. For process costing, it's the process itself. For job costing, the output is single units or small batches that differ between jobs. Okay, they're not the same. A process costing, big quantities and identical units. This is a good time to think of paper towels. Okay, and then the extent of averaging, there's not that much in job costing because, well, we've got direct labor and direct materials that we can trace right to a job, but sometimes we'll be doing different things with the overhead. Okay, overhead allocation is a big problem. And for process costing, it's all averaging, okay? Over thousands or millions of identical units that pass through each process. Like, can you imagine making screws? Okay, I mean, you wouldn't cost those individually. All right, but the paper towel is a real good example. Those movies on how things are made are really good. Okay, so let's do a quick problem here. So decide on the product costing system. Would the following company use a job costing or process costing? So a legal firm. Okay, a legal firm would be job costing. All right, an oil refinery. This is a little bit tricky. I mean, everything's processed the same way, right? So that would be process costing. Commercial plumbing contractor. That would definitely be by job. He wouldn't average his work out. That's job costing. A cereal manufacturer. Now that's a little bit tricky, but just think if you're General Mills and you're producing Raisin Bran, there are millions of boxes of Raisin Bran that you're producing and each one's the same, right? Okay, so that would be process costing. And then finally, a custom home builder. I mean, these are custom homes, not track homes, whatever that is anymore. But a custom home builder would definitely be a job costing. Okay. Now here's an example. The next thing we had to look at is how understand the flow of production and how direct materials and direct labor are traced to jobs. Now this is very similar to what we did in the last chapter. Okay, so when I think of raw material inventory, I think of material stores with a big chain around everything. All right, there has to be a lot of security here, and there's a person who checks things in and checks things out, and is responsible for all those materials. Okay, then everything goes out into the factory, and once it's there, it's all part of work in process. So this is everything being worked on in the factory. When it's finished, it goes to finished goods. See, now you knew this. So it goes from raw material to work in process to finished goods. And then once it's sold, it moves over to the income statement and sits in cost of goods sold. All right. And really look at the words. All right. We tend to always say them too fast and not really think about them. But this is literally work in process. When the process is finished, it's finished goods. Okay. This is raw material. Nothing's happened to it yet. It hasn't been converted. Okay, and then on the income statement, we have the cost of goods sold, and it's literally what the cost was. So here is a good exercise. This is a Kirkland Furniture is a manufacturing plant, makes a variety of tables, benches, and other furniture. Which inventory account would be affected by these actions, and is it going up or down? So raw material, let's say lumber is delivered by the supplier to the plant where it's stored in the storeroom. So raw material inventory would be increasing. Okay, lumber is requisitioned from the storeroom to be used for tops and seats to the tables. So in this case, now it's going to come out of the storeroom and it's going to go into work in process. Okay. Then factory workers cut the lumber for the tables. That would increase work in process. 5 tables are completed and moved to the inventory storage area to await sale. So now work in process will go down and finished goods will go up. All right. A customer purchases a table and takes it home. In that case, finished goods would go down, but cost of goods sold would go up. Okay, which is actually a result of an equation more than it is an actual, number in an account. Alrighty. So that just helps you think about what the flow is. These are pretty straightforward. And then when we schedule production, it begins with management's decision to produce a batch of goods, and we've got custom orders for people, and then we've got stock inventory. So what the production schedule is, it indicates the quantity and types of inventory scheduled to be manufactured during one period. Okay, you can read about this in the book. And then we go through this. I don't know. There are a whole bunch of forms in here that I shouldn't say this, but I don't care about it that much. I probably should care, but I don't, okay? But it just shows you, here's an example. These are jobs, and this is what they're making. This company has cross trainers and treadmills and stair climbers, different brands of treadmills. And this is for stock, and these are 2 Chicago Bears jobs. Okay, this is how many we're going to make. Production is scheduled that it starts on such and such a date, and then it ends on Christmas Eve. Okay, and then close through the holidays. So that would be the production schedule, say, for the month. When we buy goods for it, we've got what's called a bill of materials. So these are all the materials that we bought to make an elliptical cross trainer. Okay, and that comes from like production engineering. And here's the raw material record, shows detailed information about each stock record. So this gives us the number of units, the cost, and the total cost. So 6,000 were received, 100 were received, 70 were used. We've got 30 left in like an inventory record of raw materials. Okay, there really is a lot of tracing of inventory that happens in any company. So then we've got some standard forms that are used in all organizations. The trouble is we don't necessarily have these now because so much is computerized. All right, we've got a lot of shortcuts to what we used to do, but this is for purchasing raw materials. The first thing we prepare is a purchase order, and that actually a purchase order authorizes the purchasing department to enter a contract with a supplier to order parts. Okay, that's what a purchase order is. It's really more of a legal thing than anything else because they're committing the organization to paying money, and buying inventory. The receiving report says, okay, this is what I ordered. I ordered 10 came in, and we put it on a receiving report. And then the supplier sends us a bill, and in the old days, okay, we would match the purchase order, receiving report, and the invoice amounts before we would pay it. Okay, well, there are some shortcuts to all this that happen now just with systems. Here's a job cost record. This traces all direct materials and direct labor used and manufacturing overhead allocated to the job. And notice they're using the word allocated. So direct materials and direct labor are used. These are traceable. Okay, whereas the manufacturing overhead we're going to allocate. All right, each job has a job cost record. It shows the number of units produced and cost per unit, provides supporting detail for work in process inventory, okay, for incomplete jobs that are still in process, and also for completed goods. And here's an example of a job cost record. All right, so here's our elliptical cross trainer. It started on December 1st. It's job number 603. And this is when you put your detail for your direct materials, your direct labor, and your manufacturing overhead here. Get a total divided by the number of units and then have a cost per unit. All right, so it's just a way of tracing how goods move around. Okay, that's really what a job cost record does. But these are all, these are all bookkeeping functions. This isn't necessarily what I would call accounting. These are bookkeeping. They're important jobs, and it's important that it be right, and everything. But it is easily electronic, and it's not. We study it in here because you need to know the process, but it's not really accounting. Now this is tracing direct materials to a job. Here I've got a materials requisition. In other words, it's like an ask. Okay, we go to that cage where the direct materials are and say, I would like to get these materials out. Okay, and then you've got signatures over here on the bottom and everything on when they left and where they went. And here's a raw material record just for that heart rate monitor. Like here is the heart rate monitor. We asked for 50 of them. Here is the materials report, or the raw material record for heart rate monitors. And you can see we had purchased 100, then we purchased 75, and now we just took, first we used 70, and now we used 50. Okay, so what is that? So we had 175 and we used 120. So we've got 55 left. Okay, and there's our cost. And then here is the job cost record for the elliptical cross trainers. It's got a heart monitor as part of it. And there's the requisition. It was for $8,500. These are, one requisition, but there are a bunch of things that were charged to this job. Then you keep track of how many hours employees work that they charged to this job. And direct labor gets charged here. I hope I'm not going too fast, but it isn't anything that you really have to worry about, okay? So we've got direct materials, direct labor, and now the overhead. Well, we should do this first. Let's do this. Okay, so what accumulates all the costs? I think this is in your homework. Well, affiliated with each job. Okay, for all the costs, accumulate all the costs affiliated with each job, that would be a job cost record. Okay, all direct laborers in the factory fill out a labor time record. Okay, F. The accounting department will not pay an invoice, I imagine. Unless it agrees with the quantity of parts both ordered and received. So they make sure that all those things tie out. Each item in the raw material storeroom has its own raw material record. Okay? The blank is a control for the materials stored in the storeroom. In order to get raw materials, a materials requisition has to be presented. The what control for the materials stored? Probably raw materials record is a control. In order to get direct materials, you use a material requisition. That's what I think. Let's see. Before production begins, a manufacturer's purchasing issues a purchase order, okay, D, purchase order to the supplier for needed direct materials. And something is typically a duplicate of the purchase order but without the quantity listed on the form, and that would be the receiving report. And we don't list the quantity because we want it counted on the dock. When it's received, we want somebody to count how many are in there and not just depend on what's, what the inventory says. Okay? And then finally, blank is like a list of ingredients in a recipe stating the materials needed to produce a product. What would that be? Bill of materials? That sounds good to me. Okay, sorry this is a little long. Now this is the important part here. And this is learning outcome 3 about computing a predetermined manufacturing overhead rate. Okay, predetermined manufacturing overhead rate. Big emphasis here. In the last chapter, we took actual overhead costs and then we put it into work in process, okay? The fact is we can't really trace overhead directly to jobs. So what we do is we allocate it. We figure out something that drives the cost, a good cost driver, and allocate overhead based on that cost driver. Okay, and examples is how would you trace depreciation or factory utilities or taxes and insurance? Factory equipment maintenance, salaries of factory janitors and supervisors. You couldn't trace these costs to individual units. So what we do is we find what drives the cost and then we trace that. So what we do is we estimate the total, if this happens, number one, on January 1st, and we estimate the total overhead cost for the year. We do a good estimate, the best we can. And then we select an allocation base, okay, that's the denominator, and estimate the total amount that will be used through the year. Okay, so this is dollars over the allocation base. So manufacturing overhead divided by some kind of a cost driver, all right? Almost there. So we take the total estimated manufacturing overhead costs and divide it by the total estimated amount of the allocation base, and that gives us our predetermined overhead rate. Now this is done at the very beginning of the year and it's used all year long. We use this overhead rate. All right, but then here's the tricky part. So now we've got this predetermined overhead rate, right? The way it's allocated to a job is we multiply it times the actual amount that's been used by the job, the actual amount. Okay, that's the important thing there. Let's see. I'm going to put a little circle around this. Okay, so it's the actual amount. A little opaque circle, let's see. Oops, wait a minute, sorry. There we go. Okay, the actual amount of the allocation base. I want it bigger. All right, actual. And the reason is if these are dollars of overhead, this is time here, okay, on the y-axis, overhead is actually incurred like this. Like at one time of the year, you're going to have to pay real estate taxes or, different things are due at different times. Insurance sometimes is paid premium might be charged once every 3 years. Okay, these numbers don't come in on a nice even monthly basis. So if we use actual, that overhead rate would be all over the place all the time. I mean actual overhead, okay? So what we do is we come up with a predetermined rate based on what we really think our costs are going to be and divide that by a really good allocation base, the best we can come up with, and that's how we allocate it to the job. So here's an example. Well, no, yeah. Okay, so here I've got a, it's hard to see. Our overhead rate is $16 per direct labor hour, and this job used 500 direct labor hours. So those are actual hours, okay? The rate itself is determined based on estimates, but it's allocated to the job based on actual hours. So that would be 8,000. Okay, and there's our total job cost divided by units. It gives us a cost per unit for the job. And then we can compare that to what we expected it to be, or, you know, a million different things. Okay. Well, that didn't work out so well, did it? There we go. Okay, one more. Here's computing various overhead rates. This Edmonton Pools manufactures swimming pool equipment, and their total estimated overhead costs for next year are $1.4 million. So they also think they'll use 50,000 direct labor hours. They'll have $1 million worth of direct labor cost, and the machines are expected to run for 40,000 hours. Okay, so to determine the, compute the predetermined manufacturing overhead rate, if they use direct labor hours, it's $1.4 million divided by 50,000 direct labor hours. And that gives us $28 per direct labor hour. Okay, and what you want to do is do something, put put DLH in there, like direct labor hours, just to remind yourself, all right, so you don't lose track of that. If it's direct labor costs, now this is going to be the one that's going to be hard. It somehow it doesn't fit in our heads right, but this is going to be dollars divided by dollars. All right, so $1.4 million divided by 1 million direct labor costs. That gives us $1.40 per direct labor dollar. All right, so every time we've got $1 of direct labor, we've got $1.40 of overhead. Okay, and then finally, if they use machine hours as the allocation base, that's $1.4 million divided by 40,000 machine hours. That's $35 per machine hour. All right, and the last thing, just remember that it's estimated costs divided by an estimated driver gives you your rate, your predetermined overhead rate. But we allocate it based on actual hours. Okay. Okay, that's long enough, isn't it? Sorry.